half of these deals are in the $30 to $100 million range, and the other half are over $100 million. Very few of the over $100 million are actually in the several $100 million ticket size. So I would argue that outside of the small deals, Southeast Asia is essentially a mid-market PE market. Others could debate that it's a relative thing and you can't take it in a global context, and different regions will have different ranges of what's mid-market versus what's larger. Luckily, we have a very distinguished panel of some familiar faces in Southeast Asian private equity to help us think through some of these topics in mid-market private equity investing. And more interestingly, they come from a very wide variety of fund size, wide variety of strategies, wide variety of geographic focus. So hopefully it should be a very interesting discussion. I'll quickly do the introductions, and I'll do them in alphabetical order. First we have Tak Wai, who's a partner at EQT. He also sits on the IC of the fund's mid-market fund as well as the Greater China Fund. He's been with EQT since 2009, and prior to that was at Lehman. We have Wai San from Novatelus. It's an industrial and tech-focused mid-market fund. He co-founded the firm in 2011, and prior to that was at Barings Private Equity Asia in Silicon Valley and in Singapore. Next we have Eden from Olympus Capital. He's been with Olympus since 1998. He's been involved in transactions all across Southeast Asia, North Asia, as well as Greater China. Prior to Olympus, Eden worked at AES and McKinsey before that. Florian is a SVP at Partners Group in the private equity direct investments team. He's been with Partners since 2007, brings 19 years of industry experience, and worked at Euromanagers and Deutsche before that. And Darren is a founding partner at NewQuest, a secondaries fund. He has more than 20 years of experience in private equity in emerging markets, and previously was at BAML and IFC. Oh, I guess I should introduce myself. I'm a partner with LEK. We are a strategy consulting firm and work a lot with private equity guys, some of whom sit on the panel here on pre- and post-acquisition commercial topics. All right, gentlemen, let's go back to the topic which started, which is around definition of the mid-market private equity space. Why don't we start with you, Wai San? If you can tell us how you would think about what mid-market private equity is in Southeast Asia, and especially in the context of the types of deals you're looking at, the deal sizes, etc. And why do you think those deal sizes work?
Sure, thanks, Manas. To your point, mid-market is a wide definition. It's anything, for me, anything under 500. We focus on the lower middle market in Southeast Asia, and there are just a gamut of strategies that different funds deploy. For our fund, I can speak specifically to our fund, we're a technology and industrials focused fund. To what Savir mentioned, tapping upon the macro megatrends in terms of hyperconnectivity and the data-centric world. Our investment thesis is pretty simple. When we think back in terms of the industrialization of Asia, you had Japan coming first, and then Southeast Asia, and then with the rest of the Asian tigers of Korea and Taiwan, and then now China. And if you think about the globalization of technology, the industrial and tech sector in Southeast Asia is fairly well developed with good management teams and actually companies serving tier one customers. And that's our opportunity to the point of control. We take control, and we help pivot. And I'm quite glad the survey that Savir talked about. In terms of value add, it's really M&A that we focus a lot on, and ops improvement. So, but a long circular thing, way of answering it. Anything up to 500, we focus on a lower middle market, anywhere from 10 to 100.
Florian, you're part of a much larger fund, and you're in the process of raising another a very large fund. What's your view on, or partners' view on the mid-market opportunity here in Southeast Asia, and how would you compare that to what you see in other places where you operate in, such as Europe?
Absolutely. First of all, thanks a lot for still being invited to the mid-market panel. The reason why I say it is because we, as Partners Group, invest off a global fund with a global investment committee. We typically invest equity check sizes in the range $100 million US to $1 billion US. As I said, we invest globally, of which roughly 10 to 20% of annual capital allocation comes to this part of the world, Asia Pacific. How we approach investing is we only do controlled buyout transactions across multiple industries, and I think our approach is that we want to be the GE of the 80s, really have an industrial approach to investing, very focused on how we own businesses, how we think about value creation, how we like to surround ourselves with advisors which know much better about sectors and companies than we do, by having the right entrepreneurial governance at board level. That's where we spend most of our time whenever we do an investment. Why do we like Southeast Asia? Obviously, it's a region which stands on its own. I think it's more and more independent from the global world. Well, 10 years ago, it was considered to be the workbench of the Western world. Today, we see many, many more situations where you leverage off Southeast Asia, the Southeast Asian dynamics. And for us, one big aspect is we want to help successful companies become regional or global companies, very often through M&A. And that's a big part of our value creation roadmap. And certainly I think that also plays in with our global ecosystem, given that we invest globally.
We heard from Savir's presentation that valuations are robust, competition is very tough, and it would apply to the mid-market space. And certainly what we hear from our private equity clients, the favorite gripe is the very high valuation expectations of the various business owners. Tak Wai, in that context, is mid-market still attractive in this part of the world?
Yeah, no, thanks for the question. I think certainly the answer is yes, right? There's no doubt valuations are very high. I think we probably all recognize that. But it's also relative, right? It's on relative terms. So I think on one hand, you see the high valuations. On the other hand, I think essentially it drives you to work harder on value creation. And so I think that's certainly a focus for us at EQT, where we have been basically over 25 years been using industrial advisors who are ex-CEOs and ex-chairmen of oftentimes global businesses to really drive harder at the value creation. And in the mid-market context, I would say that thesis plays out very well, because the way we look at mid-market, certainly size is a criteria, but at the same time, I think is also defined a little bit differently for us, where we look at size, but the features of a mid-market company here, I would say typically involves perhaps a family or a founder-led business. Probably not as diversified in terms of geographical coverage. Maybe on the path of growing its talents, and really in terms of technology or digitalization, probably still there's a lot more to do. And we see those as opportunities where we think they are well-run businesses, local champions, obviously with a lot of experiences, led by either the founder or the family, and we can come in and help. I think that's sort of one way to look at competition in the market and the high valuations. At the same time, of course, I mean, we do find that in the mid-market you would see opportunities for proprietary transactions, and we are very much a sector-driven investment firm where we have global coverage of 6 sectors that we invest into, and there's a lot of research and work being done on a global basis to identify attractive subsegments. And so for us, it's very much also about finding the proprietary transactions.
I think your point around sectors is very, very interesting. Let's come back to that in a second. But before that, Darren, you have a slightly different vantage point here. You play primarily in the secondary space. What's your view as both a direct investor and a provider of liquidity to GPs? What's your view on the mid-market opportunity here in Southeast Asia?
Yeah, no, thank you. So, we focus across Asia. So, Greater China is our biggest market, then India, then Southeast Asia. And what we do is we provide liquidity to counterparties that own assets directly. And we do that 2 ways. One way is by buying directly those assets, either on a single asset basis or a portfolio, or provide some sort of fund solution where we can spin out a team and a set of assets or restructure a fund. And for us, what we found is the mid-market is probably the most interesting space across Asia to pursue that type of solution to counterparties, because that's the area where exits have been most challenging over the past 10 years. And while Suvir had some good data up there, we also work with APER in particular to kind of track this across different regions, and they have a little bit different data for Southeast Asia. So, for example, for 2018, they said that roughly 25 billion was invested across Southeast Asia and 3 billion was exited. So you see that gap, right? And when you look at exits, you can look at it. Most GPs are earning around 2x, right? So half that is capital gain, half that is principal. So if you compare principal to principal, you could be 1.5 on 25 billion, right? So, but the middle market is where I think GPs are finding liquidity the most challenging, and we are out there to be an alternative to traditional exit markets when GPs and other direct asset owners, would like to find that liquidity and monetize their positions.
Eden, your strategy is also quite different. You have specialist funds, and in particular, you have a mid-market credit fund. It's interesting you have a credit fund. Does that say anything about what you think of the equity opportunity in mid-market?
Not really, because 3 of the 4 pools of capital are private equity focused. We have a 21-year history focused on the Asian middle market, and by middle market, we define it roughly as 25 to 75 million US dollars of equity check. So when we started 21 years ago, we first started with a regional private equity approach, which today is actually fund number 5. That's the oldest fund we have. That fund is focused on middle market buyouts and cross-border transactions, particularly between China and Southeast Asia, and I'll come back to a couple of examples later. The second one is actually an environmental focus. Suvir mentioned ESG focused. That fund definitely caters to investors seeking ESG-related themes like environmental performance, renewable energy, recycling, waste treatment, etc. The third strategy is actually financial focused. So financial services in the middle market, lending, asset management, specialty insurance, etc. And then the fourth strategy, to directly answer your question, is on credit. And the credit basically stem from our understanding of following the financial services sector, noticing after the GFC a few years ago how middle market lending has dried up in many, many jurisdictions within Asia. This is where we set up a team 7, 8 years ago to address collateralized lending, where we're lending to companies. And so far, we've advanced about $400 million worth of loans. We're getting mid-teens returns with a nice 5 to 6% annual yield. So that attracts a completely different set of investors. But no, we run a balanced portfolio strategy with different pools of capital, and it's really an attempt to address different needs within the middle market in Asia.
Just staying on, it's interesting you mentioned the specialist funds around financial services, around environmental issues, and Takwai had brought up the concept of sector focus, and it seems you have evolved from a generalist fund towards more sectors. Does that, how important is that sector specialization to winning in this market?
It's actually pretty critical. And really, this is an evolution of 21 years. So it's not that we started on day one saying to ourselves, oh, we're going to end up with 4 different pools of capital. But I think the first is having a sector specialization means that, number one, you're following companies. And again, this is with a 21-year lens, where you're following companies in particular industries from very early until they've evolved into kind of middle market targets that we would be interested in. So I think that's one. Secondly, there's a lot of capital in today's world. I think the panelists would probably agree with that. And as a consequence, you can't do everything in anything. You have to basically follow specific themes. You have to have specific ideas on value creation, which I think you probably touch on later. And I think that actually then becomes actually a self-reinforcing cycle. And then thirdly, we've developed operations teams built around certain themes within specific industries. And as a consequence, you can then deploy these teams in similar situations within the same industry. So with all of these self-reinforcing themes, I think the sector evolution, at least for us, has actually become a very, very natural part of what we do today.
Wai-san, you too have a sector focus where you're focused more on industrial and tech sectors. Tell us about your experience and perhaps match it with the concept of high valuations. What do you see in your investment size and in your sectors?
So we focus on the lower middle market and in primarily industrials and with a tech opportunity in terms of their delivery capability. We have not seen high valuations because most of the companies that we look at are in the midst of leadership transition. And leadership is a very important thing because the leader establishes the vision. They establish the markets to pivot to. And we come in as a sector focus and we share our ideas with often the founders or a buyout team. They view us not as money. It's often not competitive. It's a relationship that we cultivate over many years, and it's trust. So, our first fund's entry valuation across the portfolio is less than 5 times EV/EBITDA. But the value we create with these founders and the journey we take is the important step. Folks have asked us what's the difference between our fund's approach versus a lot of ops teams' approach. I think the fundamental difference is that we're not leveraged buyouts. So a lot of ops teams come in to improve margins, to drive free cash flow. That's great. That's one model. We take a different approach. We take an approach as owners, and we think about terminal value creation. And that's often not a quarterly cash flow free-up exercise. It's more of which end markets do you serve and what total addressable markets you look at. And when you are able to make those acquisitions and make the successful pivot, you've actually fundamentally changed terminal value of that investment. And that's what we focus on. So it's a slight difference. Our team in Nova tell us almost all of us are engineers. Most of us are from R&D. And so we're able to help with these technology pivots. We have a history between Silicon Valley and also in Asia. And so that opens up our global M&A knowledge base, if you will.
I'd like to contrast your approach to perhaps the more global funds and a more generalist approach. Takwai, you had mentioned 6 different sectors that, do you have folks with experience on the ground here in Southeast Asia in those sectors? How do you bring enough depth to be successful?
Sure. Yeah, I think the model we use is what I was talking about in industrial advisors, and it's very much linked to our heritage in EQT, where we have been sponsored and supported by the Wallenberg family in Sweden. That has very much a industrial mindset. I mean, they've been growing, investing into businesses for over 150 years. So the idea really came from driving investments through strategic changes and upgrading. So globally, we have a pool of about 500 advisors we work with. It's been built out over 25 years. And they could be ex-CEOs of our portfolio companies or people we got to know over many years and over many different deals. The model has always been very much kind of linked to skin in the game, where they would be asked to invest into the deal with their own money. So that's a very key criteria for us. And they would be working alongside with the deal team and management, of course, to drive value creation. So you do have a bigger pool of such talents, I would say, in places like in Europe or in the US, where you have more retired CEOs, and a lot of CEOs are still very busy making money here, I think, in Asia. But I think that trend is definitely there, and we are building our local industrial advisor network here quite actively over the last kind of 12 years or so.
Florian, I think if you can help us think about how does a large fund like yours, who, unlike Novatelis, may not have all a very specific industry heritage, how do you attain that sector focus? And maybe even talk about a specific deal you may have worked on where you were able to attain that sector focus through your own model and why that was successful.
Maybe let me start off with a different perspective. I think what we're trying to solve as private equity participants in PG, right? I think what we're trying to solve is how do we generate this 500 or 800 basis point outperformance for pension funds relative to public markets, with more and more capital coming into the sector and across a longer time series. That's what we're eventually trying to solve, which means, and through our lens, is that you need to have a relative value perspective, right? Every year is different. Investment activity today is very different to investment activity in 2008 to 2009. So what we feel is, what our right approach is that rather than having that investment banking mentality always to think about doing the next deal and clapping when you're doing a transaction, is really about what makes sense in the long run and what are you able to invest in. So we spend a lot of time, rather than going bottom up per individual transaction, top down, what are the sectors we would like to be exposed in? What are the companies which are active in these segments around the globe? Trying to proactively go out and find these companies and work with management teams to position private equity as well as then position Partners Group. Now the good thing is we all live in is that more and more companies are owned by private equity. Actually at times it feels like everything is owned by private equity, but the positive side effect is that all of these assets and companies by design will be up for sale at one point. So you can take this long-term perspective. What do you want to invest in? what do you want to own? And we spend a lot of time together with our industry advisors as well as our organization is how do we build this unfair advantage early on to surround ourselves with the right industry advisors, executives which have worked in that sector, helping us to direct how should we think about due diligence, how should we think about relationship building with the management team. And our mantra is if you're not early, you are late in the deal development, right? So assets which come to the market when an investment bank is engaged, that's a difficult time to engage because then you pay up. For us, we anyway pay up because we play in the very large end side of the market and every asset we buy will go through a price finding process. I'll give you one example how we think about it is connecting the dots globally. Childcare. Every private equity investor likes to invest in the education space because it's a good sector to invest in, long-term cash flows, etc. And one example is when we invested in childcare in the US. Partners Group owns one of the largest for-profit childcare businesses, company called KinderCare. 1,700 centers, 180,000 kids coming through the doors every day. And once we did this investment in the US, we were very targeted to find similar kind of assets which are active in this part of the world to replicate because, yeah, you might have different kind of growth dynamics, but the ingredients to run a successful childcare business is the same anywhere around the world, right? We eventually found an interesting business which was up for sale in Australia, and how we were able to get our hands around it is because we asked the management team and the founder of KinderCare to work side by side with us in the Australian situation, right? To ask the right questions early on in the process, but also build that chemistry with the management team that you're not only perceived as a financial investor, but management team, and very often the founders in this part of the world see more than just the check or the capital which you can bring to the table. Of course, we will always complement that with all the due diligence, right? And LEK obviously helps here to get all the relevant data points, but very early on to surround yourself with the people who know much more about you for a specific sector, given that as an investment organization, we're industry agnostic.
Darren, we've talked about industry specialization. For you, as you think about value adding in your investments, is that relevant? And what do you do to add value to your investments?
Yeah, no, so it's interesting because the way our model works is we follow where the primary market was 5-6 years ago, right? So those sectors that were invested in then are what we tend to see coming through our pipeline. And that changes over time, right? And 5 years ago, we used to see Chinese industrial companies come through our pipeline. Today, we see 0 Chinese industrial companies come through our pipeline. We see, to Saveer's point, tech and or starting to see, more tech and VC type investments as well. So we have to be very careful about being sector agnostic, being a liquidity provider, because again, our role is to provide liquidity to counterparties in a consistent way, but also be selective around certain sectors that we feel we can do some value creation around. And over the past few years, we've won 2 value creation awards, which normally secondary players don't win those types of awards. So I think we've been careful and selective around certain sectors where we think some of our value creation initiatives can translate even across sectors that you may think are not directly relevant to each other, but maybe some of the value creation activities that you could pursue are quite similar. So that's kind of how we look at it.
Eden, perhaps, on this theme of value creation, what do you guys do? And perhaps, again, a case example would be interesting.
Well, in fact, I'll give 2 very brief examples. One, in fact, was mentioned by Minister Lembok earlier this morning, and that's in Indonesia and Bukalapak. In that particular example, we followed the lead investor, which was Ant Financial, into an Indonesian e-commerce website, one of the largest there. And indeed, as he pointed out today, it's a unicorn. Clearly, we went through our relationships in China where we tagged along with Ant at the same valuation that they went in at. And we have to give them credit. They sent a lot of resources and focus in terms of adding value, and we're riding their coattails. That's one simplistic way, but very passive way of doing it. The second example, which is a lot more active, is in Vietnam. We are an investor in a company, integrated logistics business called S-Commerce. S-Commerce core business is actually express delivery. If you actually look at the equivalent in China, that's obviously SF Express, which is today a $25 billion US company by market cap. We went through our network and identified Mr. Wang, who was the former general manager of SF Express, very senior person who's retired, and it didn't take much for us to convince him to spend time with us to help do due diligence with the company, and afterwards spend time on post-investment implementation. He was bored, he was retired, and he wanted something active to do. Fast forward to today, he helped us secure an investment in the company where we own 20% of the business. And it is today the largest express delivery firm in Vietnam after the Postal Service, delivering something like 7 million packages per month to consumers. And Mr. Wang is spending 2 weeks per month on giving very, very specific operational advice on how to run a line, on how to think about CapEx, on other major strategic issues. So we're really leveraging senior advisors like him with a wealth of experience to make sure that our Vietnam company can manage the growth, and it's actually doubling every year in terms of kind of top line growth. So that's invaluable advice, and I think it's definitely greatly valued by the company, and we've actually been able to tap into that with great success.
Thank you, Eden. I think just to summarize, I think what we've heard today so far is obviously the mid-market PE is quite wide, and the checks being written are of different sizes. There are lots of different strategies that are being used to generate alpha. It does seem sector specialization is important, but the model you apply as a fund to achieve that sector specialization also differs. Before we open up for Q&A, last question for panelists. Some crystal ball gazing. 2029 AIC conference. What will the key topics in a mid-market PE panel be? Darren?
I mean, I still think that we are at the earlier side of the value creation kind of story. You know, firms like us are, you know, we do have our one value creation person that we hired, and some of the investment professionals that we're hiring now are investment professionals, but also have operating experience. So I think that we'll, at least for Southeast Asia, we'll see, you know, more control deals, more value creation type initiatives that I think might be akin to, say, what the US and Europe have been doing for the past 15 years now, but I think it'll be more prominent in Asia than it's ever been.
One has to have a go at this one.
Sure. I would think certainly it is a topic already today, but I think digitalization and data analytics should be a much bigger topic in 10 years. And especially I think for the mid-market businesses where historically they may be playing it a little bit more maybe as a defensive move on digitalization, but going forward it should be a real driving force for value and growth.
For me would be that ASEAN delivered on its return potential, right? I think there's so much more capital which should be invested. I've seen it in Seville's slide, for the size of the economies, for the size of the macro backdrop. There should be more private equity investment activity, and hopefully returns stack up and deliver the underlying macro growth which we see here.
So 2029, I think if you can kind of extrapolate forward, the world's going to be disrupted, and Southeast Asia is not going to be any different. To take West's point, artificial intelligence is going to displace and disrupt a lot of industries. It's going to be a global phenomenon. And so what Phoenix's rise from the ashes and how successfully PE firms were able to navigate this disruption will be a key topic.
Having spent 21 years at Olympus, I think 10 years from now I wish to be retired. So perhaps we'll be one of the participants instead of being a panelist. But to follow some of the prior themes, absolutely, I think technology will be an increasingly important focus to the extent that we're definitely building our capabilities in that regard. And I see that as a natural extension of the investment landscape, whether it's fintech in financial services or whether it's e-commerce in general retail. I definitely see that coming.
Thank you to all the panelists. Any questions from the audience? Time for one question. Severe.
Perhaps I can start. Having spent 21 years in the mid-market, I think 5 years ago we would have been hopefully on the panel. But I think it's perhaps is an extension of what I've described, which is if you start focusing on particular sectors, then you're kind of drilling down into specific themes, even within the mid-market. And I think that's one way of potentially staying relevant. At least that's worked for us.
For our firm, we're a founder-owned firm, so my partners and I own our firm. We made the decision to cap the fund and stop chasing fees and focus on carry and align that to LPs, and we'll stay in the mid-market.
Partners Group is a private markets platform, so I think we always have the flexibility to see where relative value sits, right, and build the teams, the investment strategies around it to deliver that return to investors. And hopefully also companies will continue to grow in Southeast Asia, right? The company today is very different than it was 10 years ago, and that trend is only accelerating.
I mean, EQT started as a mid-market firm, and we have, of course, grown in size, but essentially refocused on mid-market a couple of years ago by creating a separate business line for it. So I think the focus in mid-market is definitely there. It is ultimately a scale issue, right? Resource scale issue, and I think for us is being more specialized in sectors, in subsectors. Leveraging on our industrial advisors who can also help us do the heavy lifting in portfolio management and in winning deals. And that helps address the scale question.
Yeah, I guess, and finally for us, I mean, we migrate to the part of the market where we can be most helpful from a liquidity perspective. And I still see that kind of the mid-market being the place which will be the most challenging over the next 10 years. So.